Hello traders, welcome to the weekly outlook and setups volume 275. We are pretty much in the middle of February, so let's make sure to lock in and give February a very strong close. The market is moving very nicely, so without further ado, let's jump into the analysis. Alright, before we jump into the technicals, a quick look at the fundamentals. Monday is absolutely a no trading day. I usually do not trade on Monday, and you've probably seen why. Because when I do a weekly outlook and then of course something happens during the weekend, especially with Trump right now being pretty active, the market tends to open with very big gaps. We tend to have like some crazy price action. So it's always good to just let Monday play out, show you where the market wants to go. But right now, especially that it's bank holiday, definitely not trading at all. And then Tuesday is gonna start looking pretty interesting. You can see pretty diverse news. Aussie, GBP, Euro, CAD, USD, pretty much all the currencies have news on Tuesday. President Trump speaking, always very scary, so always make sure to watch out for that. Wednesday kind of looks like an Aussie and NZD focus, and then we have CPI for the pound. Nothing very important. This one not important as well. This doesn't really move the market because it's just the minutes. Thursday, unemployment claims, pretty nice trading day, and then Friday we have all the PMIs. All right, so looks like a pretty good week. Nothing much to be worried about. I guess we're gonna be having the Fed rate next week, so yeah, nothing much to be pretty much worried about. Monday is just a skip, and then all the rest of the days definitely trading. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. Alright, so let's get started with the DXY. So we're having so far a very nice bearish month. We are dipping below the previous monthly low, and currently what is being exposed as a potential target is this monthly bullish imbalance lying together with this very big monthly order block, these three very nice sell candles, which kind of give me an overall bearish bias on the DXY, because pretty much my last kind of resort area was this weekly bullish, and then the market tapped and tried to push, rejected very strongly last week, and then this week is actually closing below this weekly swing point. So this to me is a pretty bearish signal. Like looking at the DXY right now, all I'm seeing is shorts, right? Because literally if there was something to push the market higher, it's already gone. This order block is gone, this weekly imbalance is gone. We tried, but we failed. So right now I am starting to think more about bearish bias, and how we're also ending up the week is we're ending it with a very nice daily bearish imbalance. So not only right now that the weekly is starting to shift bearish, but the daily is also starting to give us the signs. Even for example, this week we worked a lot with this daily bearish imbalance, so many days. And yeah, pretty much then we had the best two trading days on Thursday and Friday. My community smashed it, we smashed it on Thursday and Friday, so very beautiful trades. Currently, we are taking this previous weekly low, and we're also taking that daily swing point. So I would absolutely love it if the market pulls back into that daily. If we check out very quickly to the left, the only kind of thing that the market can potentially react from is this little unretested imbalance. But of course, how do we know if the market is going to pull back to the daily? We have to check out the hourly time frame. And the market is also ending with this very little hourly zone. So pretty much I'm going to give you the overall scenario that I'm going to be looking for. If the market's going to immediately continue going lower, it's probably going to do it from that hourly bearish imbalance and potentially head lower towards that first liquidity target that we have. And of course, if that hourly imbalance potentially fails and you really see it not following through lower, then I would expect for the market to pull back into that daily, and then from the daily to potentially start, of course, going lower. Now, currently, I cannot really say I'm bullish on the DXY. You know, I always preach be open-minded, always consider the two sides of the market, never marry any setups. Don't say the market is gonna go short. But currently, I literally do not see any longs. Everything is pointing to the short side, so I'm kind of comfortably and confidently saying that I'm bearish on the dollar. Those are my two levels that I'm going to be looking to short from, and I'm going to start to trade from Tuesday. So hopefully we have some new context being created on Monday to then of course start striking on Tuesday and forward into the week. So bearish bias on the DXY. Let's see how the others are looking like. Well, Euro USD is pretty much the reverse of the DXY. We're having that monthly bearish imbalance here that the market could potentially right now start heading for. We're still sitting inside the monthly candle, right? So nothing much to extract there. On the weekly time frame, it's pretty much the same, right? It looked quite bearish here within the last 2 weeks, but you can see currently we are opening pretty much the last week with gaps. So this one opened with a gap, then this one opened with a gap. So what is this week going to do? But pretty much I can say that the first very low hanging fruit is this high. We're getting very close to that high. And then of course it's going to be that monthly bearish imbalance that we just drew. So looking at the weekly candle that we have on EU, it looks pretty bullish. And then of course transitioning to the daily time frame, similar to the DXY, we have this beautiful daily bullish imbalance. So I would absolutely be looking for longs if the market pulls back into that daily. All right, so hopefully Monday creates like some sort of a chop, and then Tuesday taps us into that daily, and then from there we start rocking higher. Of course, below that we have this overall a daily order block kind of as a second barrier. If the market's gonna go bullish, could pull back a little bit deeper, but this is what I'm literally looking for in EU. It looks actually quite clean. Then dropping onto the forward time frame, and we ask a very simple question: is there something to push the market higher without it pulling back into the daily? Well, if you look at EU, we don't really have it. We don't have a forward bullish imbalance, and pretty much the only thing that we have here is that daily. But in this case, I could potentially use the DXY, because if the DXY actually responds from that forward and start pushing lower, EU is potentially going to pick this up as well. All right. So I'm going to be looking for longs. Again, is the market just going to respond from somewhere here and potentially start pushing higher? Or is it going to pull back a little bit deeper towards that daily and then attack the liquidity? Those are kind of my two potential scenarios. Let's see how it's going to play out, but I'm definitely long biased. We took some longs this week on EU and on GU, so hopefully we can continue with that into the incoming week. Let's check out GU. Beautiful trades on GU, by the way, this week, because it was relatively stronger than EU. You can see the monthly candle right now looking pretty bullish, but nothing much to extract. We also have like a monthly bearish imbalance here, but that one is looking quite far away, so I'm not really going to refer to it right now. And what was also pretty nice for GU is that we also had that weekly bullish imbalance. For example, EU did not have it. So that immediately made GU a lot stronger and a lot more preferred to be longed. We're currently taking this liquidity point. This is a swing point here that the market just closed, took, and actually closed below. And then of course, transitioning onto the daily time frame, we're taking liquidity right now. We're actually taking weekly and daily liquidity. You can see how many swing points were collected here. A lot of them, right? Thursday and Friday collected a lot of liquidity. We had some beautiful trades there. And then of course, we have this daily bullish imbalance. And yeah, it's all the same. DXY, EU, they all look aligned. Once again for GU, I love it when the analysis is that simple, right? Pull back into that daily and potentially continuation higher towards this low-hanging fruit first. Now, of course, okay, let me just mention that real quick. The market could open and it could do absolutely something else. It can open all the way gap down right here. So the market can open down here. And then, of course, we just gotta wait and we gotta flow and we have to adapt. Okay, so currently it looks pretty good going into Monday, but Monday could chop. So, of course, let's give it some time. Let's see what it wants to do. And in this case, should I go to the forward time frame? Well, you can actually see that on the 4H. We have this forward imbalance here, and we also have one below. But knowing that the market has collected massive weekly liquidity, I would definitely love to see a deeper pullback. But for example, the market can also respond from levels like this. If the DXY also manages to find some sort of support resistance, right, and starts flushing from its forward bearish imbalance, then probably this one can also pick it up. So currently I am just a little bit one-sided. I usually don't like it when I'm one-sided because it tends to kind of put you a little bit of a marrying your bias, right? So I'm long, so I'm going to be looking for longs. But if the market, the first thing that it shows me on Monday is it starts showing me bearish signals and starts showing me that these daily imbalances is failing, guess what? I'm going to be the first one to have changed my bias and start going on with the shorts, right? This is what I literally call flowing with the markets, and this is what is keeping me profitable. Just being open-minded, showing up every day, showing up every session, reading what the market is telling me, and then just flowing with it. But currently, the long bias looks quite good. Let's see if it's gonna persist. All right, Aussie dollar is getting us into a very interesting position right now by tapping into this monthly bearish imbalance. So can we start expecting some rejections? Can we start expecting some reversals? Of course, it's very early to be saying this, but we should start expecting potentially some sort of reactions right now because we're just getting into that monthly bearish imbalance, and this is not a small deal. So on the weekly time frame, two very nice weekly bullish candles. You can see here we very nicely swept this low. The market showed us the bullishness, and then pretty much we called this high to be taken, tapping us into the monthly imbalance. Now, of course, I'm gonna go to the daily time frame. I really haven't loved Aussie dollar for a very long time right now. I used to trade it a lot, but right now I'm mainly focused on EU and GU and a little bit of gold as well, because this one has gotten a little bit choppy, right? A lot of times it just chops and then it just tends to go fast and then chops a lot. I don't like Aussie dollar anymore, honestly. But currently, in terms of daily zones, we have an extremely tiny one. I'm not even gonna draw it, but there is a very small daily zone here, and we also ended up Friday with quite a big of an expansion. So here I would definitely love to see how Monday is going to form and whether it's going to invalidate a new daily bullish imbalance. So if the market opens and potentially crosses that line, there is not going to be a new daily bullish imbalance. So I'm going to potentially start looking for, not really for shorts, but I'm going to be really careful with the longs. All right. But if the market opens and potentially closes bullish and it forms a daily bullish imbalance, you can continue longing it as long as the market, for example, doesn't start showing with the bearish signs. Now, currently, Aussie dollar really falls out of my radar because if we're tapping into that monthly bearish imbalance, probably a lot of sellers are going to start kicking in, and looking at EU and GU and potentially gold, they're going to be looking a lot better. But this one, tapping into the monthly, it can start consolidating, it can start preparing for some sort of a move. So I wouldn't really recommend it right now. But of course, if the market keeps persisting going higher, right, don't let that monthly imbalance stop you. I usually don't really trade monthly imbalances because I really trust what is happening right now. Okay, the market, since of course this bottom here, it has been building bullish order flow, it has been bullish. So as long as the market doesn't start going down, I'm gonna keep longing it. It doesn't matter whether it's tapping into a monthly or a yearly imbalance. I'm going to keep longing it until, of course, the market doesn't start showing me bearish signs that I can start shorting. Okay, so currently also long bias on AU, but of course, keep in mind we're tapping into this very strong area of resistance. So don't get your hopes up and try to long this to the skies. NZUSD also pretty much the same spot as with Aussie dollar, tapping us into that monthly bearish imbalance, right? Now, of course, this monthly candle can potentially finish like this bullish, and then maybe next month is going to start flipping around. But of course, if you study, I've studied monthly imbalances, they sometimes work pretty good. But for example, here we had a bullish one, that one failed, right? But for example, here we had a very nice bearish one, and then this one just pinked and very nicely reversed, right? It really depends on what the current sentiment is, right? So there is another one, the market taps and pretty much fulfills the target. So we really gotta wait and see, because this one can easily get invalidated. And this is what I told you with AU, right? Focus on the very recent price action. What is currently happening? Who is currently in control? It doesn't matter what kind of zone we're tapping to the left, you always have to wait for the order flow to shift. Even if you're, for example, looking at a 15-minute zone and the 1-minute time frame is coming quite bullish, right? You gotta wait for the order flow to shift in order to confirm that zone, right? Well, guess what? It's exactly the same with a monthly zone. You gotta drop to the daily, to the quality time frame to start waiting for it to actually get bearish. Currently, we're coming in again with a very big steam. Looking at Friday's candle, this is a very easy setup for a potential daily imbalance to form. For a daily imbalance to form on Monday. And if that daily bullish imbalance forms on Monday getting into Tuesday, you can of course potentially look for some longs, but I would much prefer once again to long EU, GU, gold, and maybe find some other pairs to trade, because these ones have been quite choppy here. Not that there are no opportunities, but there are so many more opportunities on the, like on EU and GU, for example, and gold. So this one right now tapping again into this very big resistance area, taking this very massive liquidity level here. I would definitely give it some time, but if Monday forms a daily bullish imbalance here, as I said, you could potentially keep longing it until you're wrong, until the market starts failing them, it starts printing bearish structure, and then potentially you can start shorting it, having this very big confluence in the form of the monthly bearish imbalance. So those are AU and NU. I'm definitely not going to be focusing on them next week. We also saw that we actually have a lot of news for them, for the NZD and for the Aussie dollar. So definitely give them some time and let's see how they're going to respond to that monthly bearish imbalance. All right, next on the list is gold. So of course, having a look at the monthly time frame, we're currently in a creation of a monthly bullish imbalance that could potentially set up for a very nice pullback. So for example, you can see that recent bullishness here has been a cause of that beautiful monthly imbalance. And when an instrument like gold that is pretty much designed to go up pulls back into a monthly level, it tends to go very nicely, right? Or if it has monthly levels being created, that pretty much suggests that the bullishness is really strong right now, so we can potentially continue higher. But currently gold is just literally sitting at all-time highs, and we've had how many bars? We've had 6 weeks, right? It's even more. Three, yeah, we've had 7 weeks of the market not printing a bearish candle, all right? So what is the likelihood of the next one being bearish, right? This is the gambler's fallacy, right? But if you see 7 blue ones, well, there's a high chance that the next one is going to be bearish, right? Not that I'm calling shorts based on that, but we also have that beautiful weekly imbalance. The market looks very nicely setting it up for a potential pullback. Also looking at the candle anatomy here of this candle, studying it, it is a very nice rejection coming on top, and the market did not close above the previous weekly high. So there were a lot of sellers actually entering into this market, and you can see this kind of happen on Friday. Friday really sent gold back down. We started pretty bullish. We had a pullback. We took some very nice longs here on Wednesday and Thursday, but then Friday just flipped it, exposing right now this weekly zone. And of course, first low hanging fruit is going to be this daily swing low. Now, the hourly time frame is going to be very key, because you can see it kind of had a lot of weakness going higher. Like it started to get a little bit weak. It stopped really forming. Well, we did have flower imbalances. For example, there was a beautiful long we took from here. There were some other longs along the way. I think this one was also here a beautiful long. But then we reached that point. We didn't really make a new all-time high. So we made a lower high and the market just dumped, right? And I think it was also Trump speaking, saying he's going to be imposing tariffs again on this and then that and then metals and then blah, 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 right? And the market tends to react a lot to these things. Massive hourly trend change with hourly imbalances exposing this level. Now, does it make sense? Currently, the correlation, guys, doesn't make sense, all right? It used to be that USD JPY goes up, gold goes down. That's no longer the case. It used to be that the DXY is going up, gold goes down. That is no longer the case. So you should be trading gold as an individual instrument without really taking too much into account the correlation. Because right now gold looks extremely bearish, which means that if gold is bearish, usually that means that, for example, GU, EU, and the rest should also be bearish. But they're just looking hell a lot bullish, right? So again, you can see there is no correlation. So what I can say about gold is like, this is a setup that I'm definitely going to be looking for to follow on that very recent bearish order flow. And I have a very good target. This target in the form of that weekly imbalance for the market to potentially pull back and give us a very nice dip, right? For us to potentially start buying back up later again, looks pretty good to me. All right. Also, the fact that the market could also create a daily bearish imbalance is gonna also be very good, because you can see Friday closes a very nice expansion. So as long as the market doesn't cross this line, this is what I call the imbalance invalidation level, because again, if the market crosses it, then we're not gonna be having a gap here, right? So if there is a daily bearish imbalance hold created, and if we start forming these hourly bearish ones, I'm definitely bearish until this weekly. And then when the weekly taps, then we can potentially start preparing for longs. Okay, so short-term bias is bearish on gold, looking to short potentially from that hourly zone, or also wait for a daily zone to get formed on Monday, and then pretty much short on Tuesday from the daily zone towards that weekly one. All right, so let's have a look how this plays out. Hopefully nice. Let's have a look at the JPYs, starting from UJ. Overall bearish month, nothing very strong, nothing very weak. So dropping then to the daily time frame, it's starting to get a little bit messed up. We're tapping into this older weekly bullish imbalance, and the market kind of looks like it's responding, but at the same time is also not responding. What we did is we invalidated the new weekly bearish imbalance, but we weren't really bullish as well. So super fixed. Right, super mixed bias here. We had an extremely strong run down followed by a very strong run up. Currently, like the last thing we did is we formed this daily bullish imbalance here, but looking at the candle anatomy of this candle, it doesn't really look like it wants to hold. I'm not sure. I'm not bullish simply because of the last 2 days, and I'm also not bearish because I don't really have any bearish zones to be working with right now. If this market right now starts forming bearish imbalances on the daily and continues to go lower, then I can potentially target that low, Okay, I would say I am more bearish right now than bullish on USD JPY. That is what I can definitely say. And if I then drop to the hourly time frame, again, you can see these. I don't like markets that do this. Massive flush down, massive flush up, and then massive push up, and then a massive flush down. Like, come on, man. Like, why are you doing it like this? But it happens. It happens. But since we reached that top, you can see, like, if you just ask the simple question, like, who's in control, who's making the imbalances, they're bearish, right? They're probably bearish, and then we don't have a new one. So absolutely, this is the first pair that I actually don't really have anything to do. There is nothing on the daily. We have this daily bullish, but I'm not really longing from that. Can we short it then on the hourly time frame? No. Like, the hourly zones are all the way up there, and if we actually get all the way up here, it's gonna start looking like longs again. So I would just wait for this one if he wants to go short, maybe push down a little bit more, make a new zone, and then I'm gonna target this. But if it's gonna go higher, well, then start pushing higher, start printing bullish zones, and then I'm gonna long it from here. Okay, so that is USD JPY, definitely not making a lot of sense, so I'm gonna be giving this one more time to hopefully get a bit cleaner before I look at it again. Checking out EJ real quick, it's taking a very important liquidity level here in the form of that monthly swing low. Dropping onto the weekly, you can see how perfectly we're rejecting this. Like, we swept it here last week, and then this week is pretty bullish, filling the remainder if there was any gap left unfilled. And then dropping onto the daily, like, I really don't like instruments that do this. Right, massively bullish, I think it's gonna go long, then it goes down. Bullish, bearish, and right now, like, massive flush taking liquidity, boom, massive push all of a sudden. Because right now what it could potentially do is I can say, all right, I'm very bullish right now. We're looking at these beautiful daily imbalances, right? But then the market opens right now and USD JPY becomes pretty bearish, and that is gonna pull lower Euro Yen, and suddenly from being like bullish, it becomes bearish again, right? Currently, again, just based on these imbalances, I can say it's bullish. But at the same time, if I made an analysis from here and I said, well, looking at these bearish imbalances, I'm bearish, you can see how quickly the market flips, right? So this is what I can say right now. It actually looks pretty good. Low hanging fruit, of course, will be this liquidity point here, but you really gotta observe timeframes like the 4-hourly time frame, the 1-hourly time frame. Currently, we're closing not that bad. There is like not a lot of bearish momentum, because a lot of times if you actually have like a daily here and then the 4-hourly time frame starts getting with a lot of weakness towards that daily, a lot of times the daily is gonna fail. But if the market is actually coming like this, for example, it's choppy, it doesn't have anything bearish being created, then I would be potentially interested to look for longs if this zone gets tapped. So let's see how this one plays out. Let's see if we pull back. Let's see if we start getting long setups to potentially long Euro Yen. But I personally do not trade crosses anymore. I mainly focus on the majors, mainly EU, GU, and gold. So I don't trade currencies like this simply because they don't offer me an edge, right? If a currency is constantly choppy and it's constantly up and down, I don't want to be trading a currency like this, right? And if you zoom out, it's just being stuck within this range for an eternity, right? Goes from the low to the high, to the low to the high. I don't want to be trading markets like this. So that is EJ. Of course, a lot of you can find success with it. Hopefully it works. GJ, let's have a look. Pretty much the same as Euro JPY, sweeping that monthly swing low. Again, you can see within the last 1, 2, 3, 4, 5, 6, 7 months, it hasn't done anything, right? It does have its period when it moves up. It's very cyclical. Like, these cross pairs and the JPYs are very cyclical. So currently, we took out this liquidity. Again, a very nice bullish candle. Dropping onto the daily time frame, pretty much the same, right? It looked very bearish, but that seems like to be a very nice V shape here, taking the liquidity and then immediately recovering with some very nice daily bullish imbalances. So the key question right now, pretty much for EJ and GJ, is, are those daily zones going to form, and are we going to start following through bullish? Because if we do, then that is potentially going to expose targets like this. So if we pull back into this daily and we push higher and we make a new one, well, I'm definitely then gonna start looking for longs because I've confirmed the trend, right? And a trend gets confirmed when you have two higher highs. So for example, here, if you look at this trend change and say, oh, higher high, we're breaking structure, I'm gonna go long. No, you need to see the market pull back, hold, create a new higher high, and then the trend gets confirmed, and then you can potentially start targeting these highs. All right, that's the same, for example, here, right? You're looking at this very nice bullish push. All right, suddenly the market makes a low, right? It makes this push. Wait for it to pull back, for it to hold from the zone or whatever it is, wait for it to make a new lower low to confirm that, right? And then pretty much from here, you can start shorting it. And you can see it's still maintained bearish because it hasn't made the opposite. It hasn't really made two higher highs. Now, right now, again, we have a high. Let's see if it pulls back higher low, wait for a new higher high with a new imbalance, and then you can potentially start looking for the reversal. So that is GJ. For hourly time frame, it closed pretty choppy. So let's see how the JPYs pull back into these daily zones and how potentially they're going to hold. All right, let's have a look at futures, starting with the S&P, the ES futures. So we're currently looking again towards all-time highs. So far, a very nice bullish monthly candle, looking towards all-time highs, but we're starting to get a little bit chopped up. And although this weekly candle looks amazing, I had such a difficulty trading this week. It was so hard because you can right now see the daily time frame is starting to look quite choppy. Like since pretty much the end of January, it's been quite a few days that were just chopped up, right? If you look at this price action, is this good? No, like zoom out to see what it used to be. But for example, indices do tend to have periods like this where if you're not good at protecting your capital, you are absolutely gonna blow out, right? Personally, I'm pretty good at protecting my capital, but I've been having 2 weeks with break-even-ish performance, like taking some losses, then a win, then 2 losses more. It's very chopped up stage. Now, currently we're finishing with a nice daily bullish imbalance here, and we're starting to look like very close towards these very important liquidity points, like this high here, and of course the all-time highs. So are we gonna have that expansion this week to potentially take us towards all-time highs? I'm very interested for that. Monday is a bank holiday. The indices are actually going to close at 1 p.m. Eastern, so I'm not going to be trading them. But then hopefully if we pull back into that daily imbalance and then on Tuesday and Wednesday and the rest of the days we start looking bullish, I'm going to be looking for all-time highs. However, I probably looked at all-time highs to be trading them from here, right? You can see here Friday, beautiful closure, getting very close to all-time highs. Then I say, all right, I'm looking for longs, but then the market gaps down and it prints a massive bearish candle. Well, guess what? You got to flow again and you got to adapt. All right. So those are kind of the indices. I usually avoid doing macro buys on the futures because I'm really day trading them on the lower time frame. I'm really looking to catch like the daily move, like the AM session or the PM session move. So usually if I do macro analysis, so for example this week I actually lost a trade like this, thinking that coming into the opening the market is actually going to respect the pre-market levels without really like waiting clearly for that to happen. All right, so definitely focus more on the short term. Nothing on the forward time frame right now. We had a very nice bullish expansion. The market is pulling back into these forward imbalances. So of course the market can potentially continue from here, but I would definitely be happy if the market makes a low of the week and it makes that low of the week into this daily bullish imbalance and then from there starts rocking higher. Okay, so this is kind of my bias right now on the futures, especially on ES, looking pretty bullish. But again, with Trump, with the weekend news and with the overall current uncertainty of the market, I'm always keeping open-minded and I'm always going to be checking the market every single day with an open mind and of course adjusting my analysis. So never get married to this. Just because we're close to all-time highs, we were close to all-time highs 3 times, but we didn't take it. All right, so be mindful of that. Let's have a look at NQ. So probably pretty much similar to ES. It looks a little bit stronger though. Like if you compare just the monthly candles, Nasdaq looks pretty strong and it's actually getting us a lot closer to all-time highs, already taking some of these important liquidity levels. A very big and nice weekly candle, a very nice daily closure here on Friday. It actually ended up bullish here, daily bullish imbalance, taking out all the liquidity. So literally everything is taken apart from all-time highs. We're getting very close to it. So let's see if this is gonna be the week that we actually pop to all-time highs, or is the market going to return back into this ugly range? Let's see. Daily bullish imbalance looks pretty good, looks pretty strong. Dropping onto the 4-hourly time frame, it also looks pretty strong here. You actually see above that daily, we have this 4-hourly zone. So when you have such a situation, you always have to pretty much try out both, because how do you know if the market is going to pull back into this daily? You're going to know whether that 4-hourly time frame holds. So if this 4-hourly time frame holds, then you very likely know the daily is going to be left untapped, or the market could hold from the 4H, but then fail to follow through going higher and start printing bearish, and then it can actually pull back into the daily. But this is again why all the scenarios, right, about flowing with the market and really listening. We have, for example, what I teach my students is a very systematic process that you always know what to do. Whatever the market is showing you, you always know where the liquidity is, you always know where the zones are, and you usually always have an expectation of the market while also keeping an open mind. So currently, I got nothing to say. I'm pretty bullish on NASDAQ, hourly bullish, daily bullish. Let's see how it's going to open. On Monday, I'm not going to be trading because literally the stock market is going to be just open for a half day. But then, of course, after this, hopefully we open up and we make a very nice low of the week. All right, and then potentially start expanding within like Tuesday, Wednesday, Thursday, and Friday. So bullish bias on NASDAQ, all-time highs. Are we going to reach them? Let's see. Hopefully Trump is going to be bullish this week so we can ride it to all-time highs. A lot of times this week, YM or US 30 really messed up with my trades because, for example, when YM is weak, that is going to drag the S&P a little bit lower, and then NASDAQ is going to get chopped up. Or if you take a long on ES and then suddenly YM starts dropping, then you potentially hit stop loss or break even. And you can see within the last 3 weeks, it has also been pretty choppy, right? We're working out from this weekly bullish imbalance, which looks pretty good again, but you can see it also has a lot of resistance to the left. So this last unretested bearish imbalance, we're still holding from it, but we printed a bullish and it looks like we're also holding from the bullish. So this one needs a shakeout. It needs to pop somewhere. Because then we transfer onto the daily time frame. You can see the daily time frame is looking like a very nice chop. And usually indices are doing this when they're about to do something bad, right? There is a chop expansion, right? You can always find it. Like a choppy price action, right, is usually followed by a very nice period. So if you're taking hits currently, if you're trading like indices and you're taking hits, it's perfectly fine, right? I'm maintaining like a break-even performance, but I always think long-term because I know when they actually start flowing like this, or like that, I'm gonna be there and I'm gonna make the majority of my money. All right. So currently on the daily, you can see like the rest of the indices were pretty bullish, giving us daily bullish imbalances, right? Looking pretty good towards all-time highs. This one is actually making lower highs, right? High, lower high, lower high. So it actually looks bearish. So hopefully YM can also find some sort of strength towards all-time highs, because that is then potentially going to drag and support ES and NQ to also push higher. And then I transfer onto the volatility time frame. This is where it gets very choppy. Like this one has been extremely chopped up here on the volatility time frame, like bullish, then bearish, then bullish, then bearish. We also have a rule within my community on how to identify consolidations, right? It's pretty much two imbalances failing one after another. Let me spoil it out for you, right? Even pretty much tracking it from here somewhere, like we had a bullish one, tapped, bearish one, tapped, failed, bullish one, failed. Right now, if we got a bearish one, it's also gonna fail, right? We need to see the imbalances actually follow through and continue going higher. So currently, nothing I can say. Like literally, we're having this quality bullish here. The market actually, again, you can see responded from it, but failed to take out the target. And then, of course, when it does this, we target the week low, and the week low is also taken. So currently, we literally have nothing. So YM, gonna give it some time. I'm gonna be focusing on NASDAQ longs because NASDAQ is not that heavily linked to YM, right? They added NVIDIA and I think Tesla, if I'm not mistaken. No, I'm not sure about Tesla, but they added NVIDIA to YM, which makes it a bit more linked to NQ right now, right? But NQ looks a little bit more individual. It's strongly bullish, and if ES and YM are choppy, then NASDAQ can potentially offer you a better opportunity. So let's see how they're gonna play out. I'm not trading YM, but I don't love the choppiness because it makes the other two instruments also a little bit choppy. Well, I hope there are some DAX traders watching this because this instrument is absolutely on steroids, right? It's just been going up and up and up and up without a stop here. You can see how many for 6 weeks without stopping. Kind of looks like gold a little bit. But what I don't like about it is that it's not pulling back. It's literally bullish every single day. Here it gave us like a gap. So on Friday, we actually gapped on Monday and that was the pullback. And then since then, again, we've been rallying and there is no pullback, right? So currently, again, we have like these daily imbalances. There is one here, there is one here. It's literally making new ones every single day, but it's not pulling back. So again, I want to see a higher low in order to then target a new higher high. This is what I want to see. If this one continues to go higher, I don't care. I'm looking for a daily pullback, even something small like this, right? Although again, this one is Friday, gapping into Monday, and then again, a whole week bullishness. Friday, gaps on Monday, whole week bullishness, right? So if we gap down into these daily imbalances, then we can potentially look for longs, because currently it's getting a little bit too high. The volatility time frame is also consolidating a little bit. So I'm going to be needing that pullback to actually get from a good price, to get a higher low and then target a new higher high towards all-time highs again. So DAX, not looking for anything. I'm looking for a clear pullback, clear higher low, and then to potentially ride the trend back up. All right, well, overall, to wrap it up, to me, EU and GU are the best setups coming into next week, with the very nice bearish dollar exposing that monthly bearish imbalance here with daily bearish imbalance as well. I'm definitely going to be looking for shorts, shorting the DXY, which means longing EU, longing GU, both of them looking pretty good. Aussie dollar and NZD dollar are tapping into a monthly bearish imbalance that can offer them a little bit of trouble, so I would really stay away from them. They also have a lot of news this week, so I'm going to be preferring EU, GU, and also gold. Gold can also turn bullish towards like the end of this week, because right now we're heavily shifted bearish with this volatility bearish imbalances, and we have also created a weekly bullish imbalance that can be a very nice pullback level for next week. Okay, it's a little bit too much to ask from price to actually pull back into that weekly and then start rocketing from there. So maybe we just actually, the purpose of this week could be to pull us back into this weekly zone, and then maybe from there into not this week but next week we can start looking for the longs. But on the short term, looks like shorts, which doesn't give me a lot of confidence actually wanting to long EU and GU, because they're supposed to be correlated. The JPYs, I'm definitely stepping away from UJ because it's it looked very bullish here. Right now it looks very bearish. I really need to see volatility bearish order flow to establish in order for me to target this low. And meanwhile, USD JPY is looking bearish. EJ and GJ have daily bullish imbalances to potentially long from. So the correlation is really off these recent times here. So let's see. I'm bullish on EJ and GJ right now, but I'm bearish on USD JPY, which doesn't make sense, because in order for those three to work, they all have to be pointing in the same direction. And then when it comes to the indices, I'm definitely interested in longs on ES and NASDAQ. They both have some very nice daily imbalances. We're having bank holiday on Monday, so I'm going to wait for that to pass. And then I'm going to pretty much tackle them all into Tuesday, Wednesday, Thursday, and Friday. Hopefully YM, the US 30, can potentially pick up some steam to start popping the market higher, because this one has been really slowing down NQ and ES. It's gotten a little bit choppy here within the last couple of weeks, which is making like NQ and ES also a little bit choppy here. So hopefully we can start finally popping up, because usually after a period of consolidation, the market tends to expand. So let's see which direction we're going to expand. I'm long biased currently towards all-time highs, but again, if the market starts printing bearish structure, don't be too married to that bias. So that is pretty much for this week. Let me know how you guys performed this week. Let me know what kind of setups you're looking for the incoming week. I hope we had a profitable one, although it was very choppy within the first 3 days. After Thursday, pretty much the last 2 days started providing a lot of setups. So hopefully you managed to make your week at those days. I'm going to talk to you again on the next Outlook. Any questions, let me know in the comments.